Hello, everyone, and welcome to the Hardcore Finance Show with Alex and Shimon. Uh, Alex, how are you doing this wonderful Sunday evening?
Hello, hello, hello. I'm doing quite well. How are you doing?
I'm doing pretty well, despite the situation in the markets, which is what I'm excited to talk to you about. Our previous episode spoke about a bloodbath, and
hmm
the bloodbath continues. What are your thoughts?
My thoughts are you told me that we're going to talk about this before we talked. So I brought I'm excited for this. I brought handy dandy popcorn, which is actually a croissant. I brought a drink here. So I'm looking forward to, yeah, just enjoying the show. Yeah. So I'm ready to go. I think there was an article, I forgot which financial publication. Michael Burry pointed to it. Michael Burry, obviously of the Big Short fame, shorted the real estate market in 2008, where basically says that because the inflation numbers came in so much hotter than expectations, I mean, essentially the market's completely jittery, and that even though core is lower but higher than expectations, and he makes the argument basically that look, oil energy is outside of core, but it's in everything. He uses the example of your soles of your Nikes is oil,
Hmm.
it's petroleum, which is true. So if energy prices spike, everything is going to spike. And the mortgage-backed securities essentially lost the bid. What no bid on Friday, which nobody's buying mortgage-backed securities, which is literally what collapsed the market in 2008. But the Fed could drastically cut rates. So maybe you'll show me those those charts. But unless they basically go back and start cutting rates from this level, they're kind of just screwing the market here. And so it's not getting pretty. I mean, all the theses that we have in the long run will play out. They have to. It's just that the long run becomes longer and longer. I thought this would Q4 of this year, Q3, Q4 would recover. Now I mean, the inflation has to go down because if it's not going to go down, the Fed is just it's going to be nasty. And even for companies that I love, like the Microsoft, like things don't change for them. They're still growing fast, but things it's going to get really bad. What are you thinking?
I mean, I do, it's hard for me to predict in the short term of like, have we bottomed out, yes or no? And I prepared some charts, but I completely agree with you with the inflation is much stronger than expected. And I think what happened is, with COVID, we spoke about this in previous episodes. Like when someone is, let's say, sick, let's say with the flu, you can either stay home for 3 days, lose 3 days of productivity. Let's say you're an independent, whatever, you're an independent trucker and you just like get paid to drive your truck. You can either lose 3 days or 4 days of work, but then you're back to normal.
hmm
Or you can start popping Tylenol and driving, while you're sick. And then at some point, we don't know when, you'll have to stay home for longer than 3 days because like your body wants you to rest and you're not resting. So I think that's exactly what happened with the economy. The only thing that they didn't predict is the war in Ukraine. So this COVID hit, all the governments all over the world printed a lot of money and they were like, look, it's okay, like it's better than the alternative, right? So it's like saying I'll take the Tylenol and drive my truck because it's better than staying home and losing on 3 days of not earning money. And now we're kind of paying the price. And you're right, the problem was that the war in Ukraine had an extra impact on energy and energies and everything, not only the soles of your shoes but like food. You need energy to grow, you need energy to transport things from place to place, you need energy to build homes. Like it's literally the basis of everything. And yeah, so they're in a really tough spot because like I don't know if we took this course together, but basically the academic view is what drives inflation is not money printing, it's actually inflation expectations. So if people expect inflation to come,
It's kind of true though.
that's kind of the academic view. So, like, if you had printed a bunch of money and then people would not expect inflation, inflation wouldn't come. And I think the Fed is really worried now that a couple more of these prints of higher than expected, and people are going to start changing their behavior big time. And yeah, that's going to be a problem because then inflation will kind of get out of control. So I think personally that in the short term they have to get inflation, down. But for the midterms, they're going to start relaxing. They're going to start printing more money. And also, I heard an analyst that was very good, who said that statistically, a Democratic president with a Republican Senate and Congress is very, very good for the stock market. Like all the previous times where you had like a Democratic president and a Republican Congress, stock market did well.
Why?
I don't know. He didn't get into the explanation. We can speculate, but that's just a fact. I think it comes from the fact that it's really hard to spend money in that scenario because like any audacious proposal to spend a lot of money will be blocked by the House.
But why not the other way? Republican president, they can veto.
I don't know.
You could have the same thing.
I don't know what
It's
causes it, but that's just a fact. So I think that everything will improve much. We'll go back to normal after the midterm elections, which are in November, kind of end of the year. And also, I think that that is supported by if we look at what happened in 2018, both to crypto and to the stock market, which is a very good analog to what is happening now, in the sense that
well, except we didn't have inflation then. We have inflation now. So
yeah,
that's a major change. And we have a Fed that was quite, was doing QE and loose relaxing interest rates. Now we have a Fed that's doing QT and tightening because they have to.
in
I mean, this
2018 they
is
also tightened.
it's a difficult situation.
Yeah, in 2018 they also
No, they were tight. They started tightening.
yeah, and that's what like
They started to.
crashed. That's what crashed the market. So I can show you the chart of the money supply, but it's very clear that they basically started uh, stopped the expansion of the money supply, and that's what really crashed the markets. But you're right. Back then there wasn't inflation, so they could reverse. My claim is that hopefully the war in Ukraine will end by then, and that will be very, very deflationary if the war ends, because
For sure.
suddenly,
I don't think it's going to end. I'm getting pessimistic about that.
what do you think is going to happen?
What do you mean? What do I think is going to
If
happen after the
you think it's
war?
no, if you don't think it's going to end, like how long do you think will it continue?
I think that the best thing that can happen is for the West to. This is just a frustrating part. Like U.S. is stalling on certain things,
Hmm.
and so is Germany. Unless Ukraine pushes the Russians out, like they truly push the Russians out, there is no stopping this. This will become a stalemate for years.
Hmm.
That's what I'm worried about. Because Putin is not going to. He either needs to be defeated at this point, because if he gets the Donbass, he's not going to stop. He's going to want more. He's going to smell blood. This is what they're trying to do now, and Ukraine won't give that up. There'll be guerrilla warfare, and then when there's a guerrilla warfare, and Putin is going to again lose face, so to speak, right? He's going to keep. It'll just it won't stop, and that's my worry. Well, like what happens if this goes on for 5 years? What happens if the Ukraine goes on for 5 years? I mean, this is going to be well, hopefully in 5 years we can get our energy stuff, back together, like our supply chain
Hmm.
back in order. We can. There's, Biden's going to Saudi Arabia to put, the murder behind, and because we need them to open up oil.
Hmm.
Hopefully, Europe gets off of Russian gas and actually installs nuclear. If we actually, but nuclear is not fast
It's
to
not going to
build.
happen.
I don't know how many years it is. It's
That's not. I mean, I
that's no.
yeah, yeah, that's a big problem. I just really hope that the war will end because, like, I think there's just a limit to what they can achieve, and so at some point it becomes self-defeating. Just like, the U.S. theoretically could conquer all of Vietnam, but they didn't because it was just too much for them, not because they couldn't.
Yeah, but it took 10 years or 13
Yeah, no,
years.
it's terrible.
You know,
That's the big rub. But you know, uh, I think that overall, humanity keeps improving. So we can talk about the stock market and we can talk about like Bitcoin. Those two things.
yeah, let's do it. Show me the charts you wanted to show me.
Yeah, I prepared some charts just to help our viewers, and I'll try to also describe them for people who are listening to us as a podcast. So let's see here. So first of all, this is the Nasdaq. As we can see, since 2010, pretty much, it's been going up in a very steady line. And I charted the bottom here. I charted two things. One is the just like a trend line, and then the other one is the moving average of 40 months, which is the blue line that basically we never closed below that line. And so the current level of the Nasdaq is hitting both the trend line and that blue line. We haven't completely hit it yet, but that's what lets me think that maybe we will bottom pretty close to where we are. So the blue line currently is at around 278 for the QQQ, and the current price is 282. So we're pretty close. But the interesting thing to note here is the periods where you touch this line is very much coincides with monetary tightening. So this period here from August 2018, when we had an all-time high, to the bottom in January 2019, it was a pretty big drop. If we measure it here, it's like something like, let's see, I don't know how to chart, but anyway, it's from 186 from 186 to 151, right? So it was a pretty big drop. So this is the money supply. So you see here in 18, so it was going up, up, up. In August, they started to flatten it, and this is when the stock market completely crashed. So then they continued, right? And if I extend this to now, you can totally see that it's the same, right? Like January, it was going up until like, February, March was still going up, and then April is the first time where we went down in money supply. So it doesn't surprise me that the markets crashed. Those are my two takeaways. One, we're not violating a long term trend. Two, the markets are crashing because of the money supply being shrunk. The interest rates are higher, so people prefer to like leave their money in US dollars versus stocks or Bitcoin. And also, like, they discount the cash flows at a higher rate. And yeah, it all hinges on the fact of will they continue tightening or not. And I really just think that they cannot continue tightening for very long. So inflation is a problem, but you know what else is a problem? Not being able to pay Social Security. You know what I mean? Not being able to pay for Medicare and Medicaid, which is what will happen if they increase interest rates to like 20%, like Paul Volcker did. So I don't think they have the ability to increase by a lot over a long period of time. They can increase in the short term. So that's kind of my optimistic view. I listened to a Kathy Wood take about inventories building up, but I think that's a little bit too tactical. I just think on the long term here, this is the Bitcoin chart. You can see that it went down 80% in 2018, last time they tightened, and currently we're down something like 65%. So we still have ways to go. But again, this blue line here is the 44-month moving average, which we have never closed below, and we're getting pretty close. So my TLDR is we're close to bottoming out. I don't know exactly when it will happen, and I expect everything to get much better towards the midterms, because that will be when they will reverse the monetary policy. And yeah, that's my take on it. But what do you think?
I don't think they're gonna reverse the monetary policy before the midterms. There's, I think there is no way Biden can go into the midterms getting an 8.5% inflation prints. If anything, I expect the Fed to go like just to. They're not. I don't think they're gonna do it because Powell's been trying to telegraph what he's gonna do 50, 50, 50, and so on. I think they would do like 100 basis points emergency meeting. I think they need to signal, and then that actually would be bad because they'll overdo it because they can't. You can only decrease demand so much. A lot of it is supply problems.
Hmm.
Uh, well, we printed money. It's like we are where we are
Hmm.
now. Part of it's supply problems,
Hmm.
right? Part of it's the but decreasing demand won't decrease the amount of money we printed. You know, and decreasing. And by the way, there was a great chart about the velocity of money. It's been falling,
Hmm.
and it's pretty much kind of rock bottom. There's not a lot of velocity, so it's not like you can reduce demand to reduce the velocity to have people
Mhm.
hoard cash, so to speak. But you can only do that so far, and you can't do anything about supply. So they really push on demand. I don't know how much of it moves, right? It doesn't move exactly 50%. It's like 50% demand, 50% of supply. There's just the printed money. So then the whole thing is much higher. So you like that demand lever is not as powerful as it was before because they printed so much money. And so if you to overcompensate for for the supply which they can't fix, that's a political thing. And Biden is, Saudi Arabia saying they'll print more oil, but I think it's like a third of what's actually needed to compensate for the Russian lost oil for Europe, or half. I forgot how many barrels a day. I think they need like 1.1 million, and these guys are going to increase by 500,000, something like that. I don't remember exactly, but the point is that it doesn't compensate for the loss, right? And the increased demand from China if China opens up. So that's we're not doing anything on the supply side. You're going to crash demand. If you crash demand, you crash the markets hard. I mean, it could be a hard recession. So that's not pleasant. But I think this is they can't because it's a midterm year. I'm afraid they're going to overdo it because of the midterms. Because
Why
Biden
do
is
you
going to
think?
push on them.
So let me push back on the overdoing it because it's the midterms thing. Like inflation is a problem, but so is like a huge recession with huge unemployment. So what
I
happens is currently we're not seeing unemployment yet because like people I'm looking at restaurants here in DC, everything has signs help wanted because people are really eager to do all the things they didn't do during COVID, right? So there's pent up demand. I heard my friend has a Airbnb that he it's like thousands of dollars per night, like super ultra fancy, and he's in next to San Francisco, and he says like he's seeing a lot less bookings because people are now actually going abroad. Like during COVID, people were traveling domestically. Now they're traveling abroad because they haven't been abroad for 2 years. So I don't know. It's a very fine balancing act, but I just like to zoom out, and I can they cannot increase interest rates and keep them up at 130% of debt to GDP. I really don't think you can increase interest rates and keep them there. I think they're just trying to signal to the market now. Now, the other good news, there's two hope inducing news. One is that the core inflation has gone down 2 months in a row already. So, for those of you who don't know, core inflation is basically if you exclude energy and you
in
and
food.
food. So why is that important? Because like CPI is one thing, but like it's a little bit of a lagging indicator because like it takes time for the prices to adjust. But like if you remove energy, which spiked now because of the war, it gives you more of the inventories and how much stuff is actually being produced. So that's good news. And another piece of good news, which is very painful, but I think it's true, is like we have to have bad companies go bankrupt and release those resources to be reinvested in good companies. And that is also for crypto. Like I was very nervous when Bitcoin was hitting an all-time high, when all these other projects were just like getting crazy valuations without any kind of fundamental basis. And also like in tech, startups were getting crazy high valuations just based on an idea. So you could say that this is capital that's like misallocated. And so now it forces people to allocate the capital better. And then on the long term, it will help the growth. But that's kind of my chart, which is like we will bounce off this bottom, but we first have to hit it. A bunch of companies will go bankrupt, and then everything will be better. Not to talk about the fact that like all these commodities, I'm not worried about commodity prices long term because like we can invent ways to make them cheaper. It's just a matter of
No, look, of course,
right.
long term, this isn't a
Yeah,
problem. It's just like even the '70s, Volcker increasing interest rates to 20, long enough term, it's not a problem. But the point is that some people don't have 20 years to wait. Waiting 20 years of someone's life is, well, let's say a significant, that's a huge amount of time. Let's say it's 20. Even let's say it's five, waiting 5, 6 years from now for something to recover to back to where it was, right? And crashed in 5 months. It's a bit of a kick in the gut.
yeah.
And I mean, look, the long term, there's not going to be for many reasons. It's not it's like the market is going to keep on trending down for decades. It's just not going to happen. It's like human productivity, even when it falls. That's why I guess it falls fast, right? They say, take the stairs to the top, take an elevator, to the bottom. Otherwise, it would be terrible. If you're just losing productivity over 30, 40, 50 years,
Yeah, and
that's not going to happen
that's a
again.
problem with the war in Ukraine, which is like it's a huge productivity loss. Like think of all these people, instead of like producing things, they're just like shooting at each other. It's terrible.
And killing each other to reduce the number of people who can
Yeah, no,
produce.
it's very bad. And
I mean, at a very outside of the human life tragedy, I'm Ukrainian. Like we are very partial to this. We're just being very, very kind of purely capitalistic here in terms of the macro view. So,
yeah,
um,
but
no
either
offense
or,
intended
it's
for
not
people
either
here.
or. It's bad in both directions. It's not like it's bad for the
Yeah.
people, but good for the economy. But yeah. So what? So when do you think, you're saying by the midterms it won't recover? What's your prediction about like when will we kind of start recovering?
I mean, the war has to come to some sort of. The war is going to be the longer it drags on. I don't, I don't want to believe that it's going to drag on more than another year, but I think it has to get to a place where it's just like I think you said earlier, it's just not sustainable for Putin anymore. It's just like the economy has to crash. How long do they have in reserves? Like the ruble went up against the dollar a lot. I think it's just because it's a very illiquid market. I think people misunderstand that the
Yeah.
market is
No,
tiny.
and also they're backed by
It's
commodities. So when the commodities go up, it doesn't surprise me actually that the ruble went up, because basically a foreign currency. I used to work in forex. A foreign currency is basically a claim on the productivity of that country, on the output of that country. And so yeah, like oil prices are higher, so Russia is actually making more money now than it was making before.
no, not nominally. It just feels like it. I don't. You
No,
can't like they're selling
in
less.
relation to, no, they're not selling less, they're selling
Of
a
course, they're
little bit
selling less.
less oil but at a much higher price. So that's me.
No, no, they're selling a lot less oil. They're saying we can look this up. Yeah, look this up. They're selling a considerable amount less oil at a higher price. Their economy is their GDP is going to shrink by 15% this year.
Yeah, I'm not talking about the economy, I'm just talking about the oil. So here it says Russian oil sales have gone up, not down, after massive sanctions from the West. It's a Business Insider article from April 13th. um,
Is that by revenue or is
by
that by
revenue,
quantity?
Russia is making more money from its oil and gas trade. So that's they have
Maybe I'm wrong.
India and China and soaring prices. So my point is, it doesn't surprise me that the Russian ruble is strengthening, but yeah, I mean, I really, they're just agents of
Mm.
chaos. It's so sad that instead of like building a good, you know, good lifestyle for their people, they're just like destroying lifestyle for everybody else. It's very sad. But again, I think that commodities, it's a problem that has been solved. Like oil is a problem that has been solved. It's just a matter of like reconfiguring the whole supply chain, which takes a very long time, right? It's not easy to reopen the fracking.
What do you mean? How are you gonna?
We have
Oh, well,
fracking, we
sure.
have different ways to liquefy the gas and send it over, but I mean those things take time, and yeah, we'll see.
But that's just for electricity, right? You need oil as a raw input for other things,
Yeah,
for any kind of chemicals and so on.
I think it
So
will also spur innovation in the long term, in the sense that Europe will try to be less dependent on Russia, and then that, when it comes online or when it starts being priced in, even if it's like takes 10 years, but once they start building the projects, right, I hope the markets will price in the extra productivity. So yeah, hopefully, that's my hope. But my biggest point of hope is that we haven't crossed the line, we haven't broken the line on neither Bitcoin nor the Nasdaq, and that's what kind of makes me.
what's the big what's your Bitcoin line at 22?
The Bitcoin line that we haven't crossed, it is, it's never close below 23,000. 20. So we're getting close. And also the
uh,
Nasdaq, right? It's getting very, very close to that line. I mean, at the end of the day, Bitcoin, nobody knows because it's purely reflexive price discovery. But like the Nasdaq, I'm pretty sure that it's companies that are actually making stuff, and so there isn't going to be less demand for Microsoft Office. Like it's people.
Yeah, but the thing is, in the short term, it's a very it's a very technical breakdown.
Mhm.
You know what I mean?
Yeah.
It's not nobody's looking at the it's great companies being just obliterated just because
Well,
momentum is
not
shifting.
necessarily obliterated. Like I don't see great companies producing less stuff in tech. It's more like
I know, but I'm saying by stock prices
yeah,
they're
yeah,
getting
yeah. Their
obliterated.
their valuations are shrinking, but again, the valuation has the interest rate there, and it has like the whole demand. Like to your point, like yeah, companies now are gonna start cutting on their tech expenses, right? So yeah, we'll see. What would you like to summarize these turbulent times
Yeah.
for our listeners?
Well, when we're not sure when it's gonna end, but the question is, I guess the question is just the timeline. Interest rates are going up. The war in Ukraine is going to be a major, major factor, and you just need to hope that there's an end to it. I think the sooner the governments can support the defeat of Russia, the better, because they're not going to stop otherwise. And well, there we go. You defeat Russia and just say we'll still buy your oil. You just chill, and we'll relieve sanctions. Right?
Mhm.
We'll see if he goes for that. All right, my man.
Well, with that, in that optimistic note, I hope everybody has a good week ahead, and like us, subscribe to our podcast, and that's the best thing you can do for us. Just like if you like wherever you listen to the podcasts, we get more views because of that. So thank you in advance.